Okay, that's the RBI policy done and digested, and look how well the equity markets have been digesting it right now. As I speak, we're at the highest point in the day. The Nifty, in fact, is trading well above the 10,300 mark. Who would have thought just a fortnight back we were staring at sub 10,000 levels? So a very, very strong recovery is what we have at our hands. Of course, there's been a 100-point move come in the index. This is post-policy because we started off well as well, remember, today. You got good leg up from the global cues, a 700-point recovery coming in on the Dow. So started off well, and now post-policy, you've seen further advancement in the market mood. The Nifty Bank, look at that one. It's gained over 550 points in trade today, and that's no mean feat, really, for a beaten-down sector like the Nifty Bank to plunge to such highs right now. And the strength across the broader markets is just marvelous as I speak right now. You've got the mid-cap index staring at a 2% rally. The small caps are well above that 2% gain mark. We still have Mr. Praveen Kumar Gupta from SBI with us. Mr. Gupta, I don't know what to focus on. The fact that RBI's inflation projects indicate that there is going to be no rate hike for a long, long time to come, or the caveats in the undertone and a very cautious undertone, if I can say at that, because Ajit Patel categorically mentioned that they've got a close eye on the global developments, what with regards to trade wars and how heightened this situation could get. And crude, like he said, which is the biggest catch point right now, which could completely challenge their growth outlook and inflation outlook thereby.
See, I think as we discussed earlier, the policy was on the expected lines. The commentary has really been very, very dovish. I think the market has taken that in the right earnest. So if you look at the 10-year yields, they are down to 7.2%. So which means that, in fact, the dispensation which was given by the RBI in terms of spreading out of the MTM losses would probably not be required in the next quarter, actually. So I think we should probably be able to write back some of it. So I think this is probably what was expected in the way that, the RBI's earlier projections on the inflation were a little on the higher side. So I think they probably reflect more of what is really happening, actually. So I think the market is reacting to that. I think the commentary has been very, very positive, actually, and it's a very welcome move.
Obik, I'm frankly a little puzzled after hearing the press conference and the governor's response to the questions raised. I'm frankly a little puzzled because he listed out a number of reasons, all of which would at least have warranted a change in stance or a change in the tone. But on the contrary, the RBI opted to keep maintain status quo and retain the same neutral stance as well. So are you as puzzled as I am that the action doesn't quite fit the words, Obik?
Oh, absolutely, Maithili. I'm very puzzled, and I think while I welcome this, softening of stance, all the uncertainties and all the risk factors that were discussed both in the policy and the press conference could have just as well made a case for for a hawkish stand or whatever. So I think in terms of the internal logic or rationale that was provided, it was very confusing. What seems to have happened is that, in the way that the communication came through in the press conference from, different members of different officials of the RBI, it seems to be almost a sort of a dramatic change in their, almost their worldview, if you like, from being hyper cautious inflation fighters to people who are sort of willing to live with a degree of inflation risk and allow growth to gain momentum, which is welcome. But I think it is it seems almost like a change in the sort of broad philosophy of monetary management, which because earlier they would sort of fret over the 4% target, use any upside risks which were tilted to the upside to justify cautiousness on the rate front, on the liquidity front. But this time, I think the entire the way the the bundle of underlying factors and risks have been woven together into a narrative is very different from the kind of weaving that we've seen in the past. So I think there seems to be a departure from the trend, as it were, over the last few policies. And that certainly puzzles me. I don't know whether that is a sort of a permanent or a transient change of heart. A change of heart it certainly is.
Oh yeah, it is, especially considering in point 22 of their observations or outlook, they've said that on the downside, the deterioration in public finance risks crowding out private financing and investment. Furthermore, even as global growth and trade have been strengthening, rising trade protectionism and financial market volatility could derail the ongoing global recovery. In this unsettling global environment, it is especially important that domestic macroeconomic fundamentals are strengthened, deleveraging of distressed corporates and rebuilding of bank balance sheets persisted with, and the risk-sharing markets deepen. So yes, it's a little puzzling a scenario, as dovish as it may be. They've always talked about those caution points, and the governor as well himself highlighted exactly those. But for now, for equity markets, which are typically known to act in advance and in anticipation of an event, today they are taking RBI's policy just at face value. That's all they're bothered about. Look at how the markets are moving. The Nifty is holding up 2% right now. We've got a tick of 10,300. The Bank Nifty is up, soaring 2.25% higher. And look at the yield reaction. We haven't really marked that. You've got the bond yield, which is currently down by about 10 basis points. That's the 10-year G-Sec paper. That's as well reacting just very positively and on expected lines after the dovish commentary on face value, albeit from the RBI governor. I'm going to quickly get in some market reaction as well. Kunal, what a runaway move. And having said that, it's across the board. Even Europe is holding out very well. Do you think this is sustainable and RBI has only instilled further fuel into the markets?
Definitely, Aisha. I think this instills a lot of confidence for the markets overall. The structure will now improve. We will now see Bank Nifty participating, especially with the with the policy reactions. I believe Bank Nifty is the most important beneficiary, and you can see it clearly in the price performance today as well. PSU banks leading from the front, a very good comeback from the private sector banks, especially the ones which have beaten down significantly. So I believe that this is now a sustainable rally. Maybe over the next couple of days, you might see this rally shaping up into marginal sort of gains, but I think the trend is now set up higher for the indices, both Nifty and Bank Nifty.
I have to come in on this and forget about the market reaction, forget about inflation, forget about growth. I think the one thing that we have to say about this policy is that it was absolutely mum on issues that are plaguing public and private sector banks. We did not see the word PNB, we did not hear the word scams, we did not hear the word Nirav Modi, we did not hear the controversy around ICICI Bank. I mean, 6 questions were asked to this press conference and they were all on inflation. Hindi news channels want to ask on inflation. There was one question asked tangentially on the governor's powers to regulate private and public sector bank. The reality is that RBI needs to come out in the open and actively, proactively talk about regulation, proactively talk about issues that are plaguing public and private sector banks. I expected the RBI to do a commentary and to talk on the controversy at ICICI. There's been a run on the bank twice in 2003 and 2008 and not a word from the RBI, not a word from the RBI on the PNB scam. This is the banking regulator. This was their chance to come out in the open and mention the 2 controversies and mention issues that plague public and private sector banking, because that's the communication that is expected from the central bank. The central bank is not supposed to just come there and make projections on inflation and growth. They're also the banking regulator. And even on inflation, the question continues to be that why have you lowered inflation target when you in the same breath are saying that there are upside risks to inflation? I don't understand the commentary at all, actually, and I think I would have wanted to ask this question, but of course nobody gets a chance to ask questions in the RBI press conferences, and that to me is puzzling too. But as the banking regulator and as a stakeholder in this entire story, I feel let down that the banking regulator did not deem fit to make a proactive statement. There was a statement made on cryptocurrency, there was a statement made on data for payment apps, and there wasn't the need for a statement to be made on controversies that plague. I mean, the big question is, have you probed ICICI Bank loan? If you haven't, why haven't you? Because there was a whistleblower complaint. If you have, why are you keeping quiet on this? On the PNB, why did the regulation and the supervisory roles fail? I mean, who's going to answer that question if not the governor and his team? And that continues to be the question that I think market should be talking about. Market reactions set aside, there's a larger economy to be taken care of. And Indian public and private sector banks are going through a rout right now. Maithili, I mean, you want to come in on that because I know it's close to market closing, but we have to raise these questions as an independent channel, as a channel that is a believer in the India growth story. Regulators can't be mum.
Oh, absolutely, Supriya. I couldn't have put it better and more strongly than you, because frankly, I find it very, very puzzling that the RBI papers over a number of questions, and even in the press conference, the normal, in fact, the best way would be to take as many questions as the time permits, whereas the RBI, under the new present governor, has always followed this policy of picking and choosing particular people from whom the bank will take questions, the governor will take questions, and that, to my mind, itself is not a very desirable thing. Governors of central banks must be prepared to answer all questions that are posed, because these are questions that people genuinely want answers for. So if you're going to pick and choose questions, that doesn't set a very good signal at all. And as you rightly mentioned, today is a time when there is a serious crisis of confidence. Yes, nobody really worries about their money being safe, but there are a number of issues, particularly in the case of ICICI Bank. Also, we have the issue where the government has very categorically said that RBI's powers of supervision are not different for public sector and private sector banks. So there is this ongoing controversy with the governor saying one thing and the government quite categorically saying exactly the opposite. So what is the correct position? Number one. Number two, why is it the post of the DG, commercial banking, is still not filled? There are a number of questions the RBI has just chosen to keep quiet about, and that is never very good news, because the central bank must ultimately inspire confidence. And when you choose to duck questions or remain silent on critical matters, it never sends a good signal, and it really damages the credibility of an institution, credibility that is built up very carefully and cautiously over the years.
In fact, you know, I'm going to raise this exact point that Maithili as well as Supriya raised with Pankaj Tibrewal. Pankaj, it seems like today, you know, it's the RBI's inflation projections that the markets are minding more, and the fact that maybe it's hinting towards a note rate hike coming in for a very, very long time to come. But how is it that the markets are completely ignoring critical key issues like the health of the PSU banking pack? As I speak right now on my screen, the PSU bank index is up 5.5%. I don't recall in the last many months when the index actually staged such a big move. The RBI governor, like my colleagues have been highlighting, has been completely mum on the issues of PNB, on the issues of ICICI Bank, or for that matter, anything else.
So clearly, this policy has been a welcome move. I'm listening to all of you and the participants on your channel, and everybody is puzzled by this move and the GSEC move. Let me take you not long back in October, November, the yields were at 660, and from 660 we moved to 780 without a rate hike, and there was no possible reason for that movement. Now when we are moving from 780 to 730, people are finding it very surprising. We don't think so, because we believe that that move was exaggerated. I think this central bank also needs to keep in mind, apart from inflation, that growth is as important. And whenever we were speaking to corporates, over the last 1 or 2 quarters, the animal spirits were coming back. But over the last 2-3 months after the rate started moving up, there was some kind of a cautiousness. And don't forget, apart from the 12th February circular, which came in, which asked that no restructuring and everything has to be accounted as NP or 6 months for resolution, that was a harsh one. Apart from that, the bond MTM losses were also sitting on the bank's books. So coupled, the sentiment and people in the markets were confused. I think this is a welcome move where RBI is coming to the cognizance that growth is as well also important. Yes, the points you are talking about on the public sector, bank health or the private bank controversies which are going on could be handled in a separate way, not mainly in the monetary policy.
Yeah, but for now, the markets are rejoicing, and how what a solid rebound is taking place.